Welcome back to Over 55. I'd like to welcome our guest, who is VanRooyen, who is the president owner of Accutax.
That's correct.
Welcome aboard.
Thank you, sir.
This is the time of the year when we all have to get all of our T4s and 5s and whatever put together. I guess one question is, when should we receive or expect to receive them from the people to send them out?
Sort of a long stream of receipts. They usually start with the old age pension, Canada pension, toward the end of January. Throughout the month of February, you'll be receiving any T4 slips or T4 APs, which is your pension slip, T4Es, if that happens to be in your receipt list. Everything should be normally issued by the end of the first week in March. However, if you have investments in mutual funds and or life insurance segregated funds, they issue T3s, and generally they don't have to be issued until the end of March.
Okay.
So it depends upon the company and the number, their particular situation. But generally speaking, by the end of March, you should have everything in hand. By the end of the first week in March, if you only have investment income from banks and regular pension income.
Now, then I have to have them all finished and I guess posted to the government by the end of, is it April?
April the 30th, and unless you happen to be self-employed. If you have a self-employment statement on your tax return, you actually have until the 15th of June.
Okay. Now, I know you're a big supporter of e-filing.
Electronic filing, yes. I started electronic filing in 1995 when we actually became able to do it. I'm also involved with the electronic filing board of there's a nonprofit group which is essentially a lobby group to improve electronic filing. Currently, we're running about 1,500 returns which we e-file every year. The system has become much more refined over the last, it's actually almost 25 years. That we've been electronically filing.
Has it been that long?
Almost,
wow.
Yeah.
That's a long
the 95 tax return was the first one, so this is, I think, the 24th year that it's actually been.
So you've had 1,500 that you do?
Not personally,
okay.
not quite. I do 500 or 600
okay.
myself.
So, so of all your clients that you do tax for, what's the percentage of the ones that do electronic filing?
99.9 if possible.
So you try to put them through your organization on the E, so it's a lot easier.
And anything that can be electronically filed, we do.
Okay.
There are only a few returns that cannot be electronically filed. Very few and far between at this point in time. I would think the ones we actually could not would probably be 20 or 30 last year.
Okay, so that's really good. I mean, one good thing too is you've been around 26 years like our organization, so you've been around the block for a while, so you know what you're doing with this.
I hope I do.
No, I think you do. Is there anything that, we do go to an older adult audience. Is there something has there any been changes, or I'm 65, should I be looking for anything specific?
The biggest change I would say in the last 3 or 4 years has been in pension splitting. Okay. If you're in receipt of a pension from an employer, you can split it with your spouse. Up to half of it can go over to your spouse, whichever happens to be the most advantageous. It does not have to be 50%. It can be anywhere in between, whichever number works for you, and it doesn't have to be the same every year.
Oh, okay.
A lot of people seem to think, well, once I set it 50% or 45%, it has to stay like that forever. The only caveat I would say is if you're not yet 65 and you're getting money from a RIF, you can't necessarily split the RIF income. It's one of the exclusion. I don't think it's fair. I don't think it's right, but that's the way it is.
But it is the government.
I don't make the rules. I just administer them. I think, larger issue that's happening for seniors this year is the province of Ontario has changed the way they're going to distribute the Ontario property tax credit. Historically, it was a credit on your tax return, and if your family income was under 45,000 or so, there was a credit for you. Beginning this year, in July, they're going to start issuing quarterly checks. And they'll be issued in July and December, March, and April. No, I'm sorry, March and June. That isn't quite quarterly. I don't know why those particular months were chosen, but it is 4 times a year, so I guess that's the government's definition of quarterly.
Now, will they take their tax out of it before they send the check, or will you have to pay tax on it after you receive it?
It's a non-taxable
Well, I like those checks.
issue, okay? The other issue for seniors is there's if you happen to be a property owner and you pay property taxes, if you're single, income under $35,000, or married or in a common law relationship, and your income is under 60, there is an Ontario sales tax or property tax grant, which can be up to $500 depending upon where your income lies.
Okay. So this is a good reason for somebody to come to somebody like yourself, because you know all the stuff that's going on, and going through these pages and pages, a lot of us, people that are novice at this miss this stuff, and there's a reason why we come to tax consultants and professional accountants like yourself.
Mm-hmm. Yeah, our client base is probably about 50% over 55. It seems to me as though as people get older, they start realizing that their situations become a little bit more complex, and they just don't want to have the hassle of doing it themselves anymore.
And that's true, because maybe the income streams are different because you start to cash in the RIFs and all the other investments, and it gets a little more complicated, and our minds get a little fuzzy with all the numbers as we get older.
You want to believe it.
Well, that's great. Anything you'd like to tie it up with, that maybe some advice to people?
I think the primary thing would be to keep some good records. Be aware of what your receipts are. Revenue Canada is penalizing people for non-inclusion of income. If there's a T4 slip that you normally receive and you didn't get this year, if you don't include it on your tax return, there's that can be up to a 20% penalty over and above the tax payable on it if you don't include it on your tax return.
So be very careful.
Be proactive and make sure all your slips are there before you file.
Okay, thank you very much, Ron, for coming in the station.